Thanks a lot, guys, and thanks, Chrissy. It's great to be here. This is the first time Pivotal's been presenting for RIU, and it really is a new story, and it's quite possibly the biggest copper project that you've never heard of. So it's worth spending a little bit of time to think about what that means in the market that we find ourselves. So at a high level, Pivotal's exploring in Quebec. We've got two main assets in the province. The flagship asset is of course the Horden Lake project. It's got a very large copper dominant resource already defined there, 28 million tonnes at 1.5% copper equivalent. We're looking to increase the size of that and concurrently move that forward as a project, because we do see when markets tend to move into the direction that they're looking at moving, the more advanced projects are the ones that really benefit the most from that. We've also got earlier stage exploration, a large land package in the BAGB project. Some exceptional discoveries have already been made on that, nickel and copper, very high grades, and a lot of unfinished business there for us to follow up on and move forward. So we've got a little bit of the both. We've got the advanced, lower risk, very large project combined with some really high torque exploration. We're in Quebec. Chrissy just touched on it. It is a major advantage, and I'm going to take you through a few reasons as to what that actually means for you as a shareholder, and it's important to understand the practical benefits of being in a supportive mining jurisdiction. And of course, we've got those critical metals, copper in particular. I don't think there's a single person at this conference that doesn't have a positive view on copper. There's very good reasons for that. I come from a private equity background. We invested probably about $300 million into copper projects, and so we spent a lot of time looking for them, and I can tell you that they're not there. And that's why the market's so excited. You've got obviously very favourable demand. Doesn't matter what you want to pick in terms of technology, of generation, and storage, but you got to have copper to move the electrons around, and it's the common denominator. And there's really just not the projects. We've been through a period where it's been underfunded, and there's a real supply shortage coming. So it's the right place to be, and as shareholders, you benefit from the critical minerals narrative in terms of financing and permitting. And those things protect you as shareholders from dilution effectively. It reduces delays and lowers the cost of capital, and that's the world that we're moving towards. And we're funded. We've got re-rate catalysts. We've just done a drill program. You've got a lot of news to look forward to, catalysts to de-risk the project and increase the value, and you've got all that to look forward over the next 6 months. So just coming back to Quebec, it is a very supportive mining jurisdiction. It's the map of our projects here. We're in northern Quebec with Horden Lake, and just north of the Abitibi, so Val-d'Or, extremely famous mining region, well known. You've got 22 operating mines in the province, 2 smelters. There's really not a better place to be operating in Canada, in my opinion. And in terms of support, you've probably heard from lots of people at this conference that you're in a supportive mining jurisdiction, but you sort of ask yourself, what does that mean practically for the companies that are operating there? And it's great to have a stable mining code, but companies at this stage, they need practical assistance, and this is why the flow-through share scheme is just so important to understand. Effectively, flow-through is a tax haven system that individuals and corporations can use in Canada, and all you really need to know, and you can look at our financing that we did in March last year, we raised $2 million down here in a conventional sort of financing with the usual kind of investors that would come into, and they are our shareholders, but those shareholders pass through a shareholder in Canada as the shares are acquired. And the net effect of that is you raise $2 million down here and $4 million gets put in your bank account in Canada. So the government is paying half of our exploration costs, and it effectively halves the dilution for you as shareholders. And if that's not a supportive jurisdiction, I don't know what is. So this is the flagship project, Horden Lake. It's not a lake. It's a pretty flat, featureless part of the world, to be honest. It's a little bit boring, but that's kind of what you want in mining. There's no people around. We're on Crown land. No Indigenous issues. They're just stakeholders like everyone else, as you'd expect. And no mountains. Sometimes you get places in Canada where 10 kilometres feels an awful long way away. So there's no mountains, no rivers, 10 kilometres to the highway that runs right past the project, all weather highway. So good infrastructure, no people around, and a great place to be sort of developing a project. So some facts and figures on the deposit itself. So we've got a very large resource endowment already, 28 million tonnes at 1.5% copper equivalent. That's about 50% copper, about 30% nickel and 20% other, and that other portion we're looking to grow that, and I'll explain in a couple of slides kind of what that means and how we're going to do that, but essentially you're going to see those byproducts contribute more value to the project. It starts at surface, it's very well defined, it's had 55,000 metres of drilling, we've just done another 7, so you can take that over to 60. It's 55% indicated, and as I said, there's a very large open pittable project that sits on top of this. As part of that, 60-odd% sits in an open pit shell, so that's what you're looking for a lower risk, lower capital development scenario. We got a plan to advance the project and add value to it through exploration, and we're just at the start of that with the first drill program that we've just executed. That's the first time it's been drilled in the last decade, effectively, because the project was tied up in private ownership and was not worked on, which is very unusual for a project of this size and scale to have not sat there dormant in a listed company. Normally those projects are ones you probably should avoid. There's a reason it didn't have money spent on it. There's a very different background to this project. We've got those value catalysts pending, drill results pending. We just put out the first 2 holes of 33 holes, so lots of news flow to come, and I'll sort of take you through in a couple of slides what a little bit more detail on the work that we've done. So this is the resource itself, the coloured boundary is the 28 million tonnes. You can see effectively, there's no drilling below the resource that hasn't hit mineralisation. There's no holes. Like, as far as the project has been drilled, there's mineralisation, so it's completely open at depth. It's been drilled relatively shallow for this part of the world. This part of the world, the deposits can go a long way. And there's only 4 holes below 440 metres vertical, so there's still a lot of potential here to grow this resource. And as I said, we've just started that process with our exploration. We've drilled 33 holes. It's a combination of some infill drilling. I'll take you through the next slide why we've done that, and a combination of deeper holes which are testing the down plunge extension. So we're looking to extend the mineralisation down plunge, add tonnes that way, and then on top of that we've done downhole EM on those holes, and that's looking to generate exploration targets down plunge so that we've got a plan to go on and continue to grow this over time. We've got massive sulphides in the mineralisation. Downhole EM surprisingly has never been done on this project. Excellent tool for targeting extensions of this mineralisation, so we're really excited to be able to share those results in the next couple of months. So we've just put out 1 hole, essentially talking on that grade opportunity that we've talked about. Some of the holes, as I showed you before, some of those holes are sort of infill holes, and that wasn't driven really by geological confidence. We've got a fairly good understanding of the ore body. What it was really motivated by was to infill information. So those flanks of the deposit, the southern and the northern flanks, they've only got copper and nickel assays, and we know from multi-element assay that was taken in the central part of the deposit, the different drill programs that have been done at different periods of time, that there's significant gold, platinum, palladium, cobalt, silver byproducts in the rock, and it's just sitting there to be discovered and assayed. So we're effectively just infilled some of that information, and we're looking to update the resource in the second half of the year to bring that value into the project. But yeah, first hole that we put out there, 37 metres at 1.3% copper equivalent. Like, that's really indicative of what this project is. You don't get 28 million tonnes by intercepting a couple of relatively narrow bits. This is a big, thick zones of mineralisation. You've got great geometry there, sitting in the open pit. You get good copper grades and then a lot of contribution from the byproducts, and that's how you get 28 million tonnes at 1.5% copper equivalent. You get intersections like that, and there's lots more of those to come. So from a development perspective, look, the project is well located. As I said, it's in a great province. It's got all the skills and infrastructure around the project that you need. At the project itself, it starts at surface, open pittable. That lowers your development hurdles, lowers your capex, lowers your execution risk. Everyone prefers an open pit starter project. You can defer a lot of that underground capex. It's got great geometry. The shape of the ore body sits well in an open pit, and it's thick, and when you move to underground, probably long hole open stoping, you've got relatively productive mining conditions, and that means lower costs. Positive metallurgy, the copper is extremely good, the nickel is good. the work that we've done, I'm looking to share some of that shortly. There's no nickel in silicates issue, which is sometimes in Canada you can get a lot of the nickel locked up in the silicates. We're not going to have that problem here, and we've got a detailed metallurgical test work proposed plan that we're going to be executing after this drill program. Where, as we've collected the assays, we're going to pull together a sample, and we'd be looking to produce high-grade copper and nickel cons. That'd be the highest NSR for this project, I believe. We've got that paved highway within 10 kilometres. This is the highway. It goes for about 1,000 kilometres. It links Val d'Or with the major hydroelectric complex, and that hydroelectric complex is the reason that's up in James Bay. That's the reason that Quebec has pretty much the lowest power cost in the world. Exports power down the eastern seaboard, and you're talking 5 cents a kilowatt hour in the province. And power is kind of a third of your operating cost in a conventional environment. So significant savings for the project to be able to connect to that, and it's 100% renewable as well, which is obviously important as we move forward. And just a great place to be developing a project because we've got everything we need. So just quickly on valuation, so I think, hopefully you believe it's actually not a bad project and it looks pretty good, and then, you look at, well, we've got a market cap of $12 million, and I'm just telling you that isn't sustainable over the long term as we bring this project forward and demonstrate the real potential that's already been discovered, as well as the potential for it to grow. And so the green bars here, you can see that's the size of the resource itself in copper equivalent. You could do a similar graph on copper only. And the red dots is our valuation per tonne. So we're trading at a significant discount to our peer group. Don't forget that peer group's all been beaten up. Everyone's in the same boat. We've been in this difficult market, and the positive copper prices haven't really flown down to this part of the market yet. And so you can see real re-rate potential as this project gets considered as a credible copper development peer in that copper peer group. So lots of opportunity, as well as you'll get that compounding re-rate as the whole sector re-rates as we move into a different sort of market, more constructive market than what we've been in recently. So just quickly on our exploration projects, I said we've got super high grades being discovered there at BAGB. We've consolidated a large land package, 157 square kilometres. There's lots of prospectivity, lots of discoveries that have been made here. We've focused just a little bit of work here on a particularly exciting discovery. You don't see drill results like that every day. Some very high grades of nickel and copper that have been discovered from surface. We've done a geophysical survey in this area. The MT survey looks a little bit deeper, and what we've seen is a mafic contact model being validated. Those discoveries sit on that contact host horizon. We know that we're getting a better understanding of the geology, and we've got some really great conductive targets that sit on that horizon. And the exploration that was done here, you can really see how limited it was and how concentrated it was relative to the scale of the opportunity we believe here. There's very high grades. They came from down below. They didn't come from up in the sky. And you want to find out, track the fluid flow path and find out where you can get really scalable anomalies of scale that sit on that prospective host horizon. And that's what we're looking here. We're looking to find something big. So lots of news flow to come. As I said, we just got put out the first 2 holes of a 33-hole program, 34-hole program. So assays are going to be flowing out constantly over the next couple of months. Resource update, met test work, lots to pay attention to, lots to get this project up in the market. And it's a new project for the ASX. It's new in the listed markets really for the last 10 years. And so it's really a good time to be out there telling a new story. So we've got the right commodities, we've got the value that's underpinned by a very large resource that's trading at a real fraction of its value. We've got a lot of leverage to exploration, we've got different types of exploration, but the potential to grow both sides of the business, and great location and near-term catalyst that people can really get to understand this project and be active out in the market at this pretty important time. So thanks for listening. Come chat to me at the booth if you'd like to know more.